Folks, welcome to the Z hack of the Z stack. It is a once in a while series of clips. Today we're going to be going through an instant gratification options trade, which requires minimal mental capital, as I would try to make it conducive towards a successful execution for you. You, of course, being the master of your margin, and whatever knowledge of implied volatility you may require, I will touch the bases as efficiently as possible.
Educational institution as possible.
Don't hesitate to DM me or send an email or reach out in case something's confusing. Without further ado, let's get right to it. So only using two tools, you could technically use QuantSap or whatever proprietary option analytical tool platform you need, but it's not going to be too complex. So over here we have sensible, nice wordplay there. And then there's a website called OptionStrat. While this website is for American ETFs and equities, you'll see why it's useful. That's the sort of programming that's inbuilt into both of these websites that allows you to get by like a snap of a finger. It's a quick conviction trade. So like options are like trading options are like chess. You're sitting here, you're looking at your screen, you're just seeing a bunch of numbers, you're trying to imagine what to do. But let me just show you a quick instant gratification income generator. Okay, so you click analyze screener. Okay, just forget you could obviously do any stock you want. This doesn't only apply to India, but since the starting audience is Indian, just check the IV percentile. If it's over 50, you're going to be a net seller. If it's under 50, you're going to be a net buyer. Just take note of that. Okay, and basically what I'm going to show you is the easiest order of, not difficulty, but analysis. There's more metrics you can use if you want to optimize what it is that you're doing. So go to strategy builder, and we're going to click on neutral. We're going to click on short iron condor. Now just remember, I said under 50 is buy, over 50 is sell. So click short iron condor if it's over 50. Otherwise, if it's under 50, you're going to want to do a long call condor or long put condor, and that might not be readily listed over here. So yeah, so there's a degree of trial and error involved, but that is what these tools are for, right? This isn't the ultimatum of executing the strategy by any means. I'm going to release tools that are going to make your life even simpler and require the least of your mental capital. But another benefit of watching this is that you don't have to deal with the hermaphrodite voiceovers of your typical videos. Okay, so yeah, we're on this page. You see this funny shape. Before you select these strike prices, first go to the option chain, the Nifty option chain, choose your expiry. If you really want to know which one's going to make you more money over a shorter or longer time period, that's going to be the topic of the subject of volatility. And that's not the concern of this video today. So we're just going to instant gratification we're talking about. We're just going to take the expiry 5 days out. Now I'm recording this on a Saturday, so if I was holding an options position over the weekend from a weekday, then definitely there'd be some factors contributing to my profit or loss. But if you just want to select your figures, there's going to be a big range. Okay, whether you're doing call options, put options, or a mixture of both, just make sure you're only dealing with calls and puts which have significant open interest, otherwise known as liquidity. Otherwise, you won't be able to buy the option, you won't be able to sell your option either, and then you'll get assigned, and then it's a possibility that you won't make money. Yeah, so back to this thing, strategy builder. now assume that these are open interest and you can do plus and minus and here and there. And basically, horizontal axis is price, vertical axis is max is your profit or loss. This chart shows you today what your profit or loss would be at the given price, and options just work this way until expiry. As you see days into the future, you see how that evolves and changes. So this is because of this factor theta, which is if your premium is get as opposed to pay, then theta is how much the price of the overall options is going to reduce. I think one contract is like 75 nifties. On this website, the reason that we use this website is because, okay, I've just chosen a random contract here, but you can see by sliding these around, you can see how you can adjust your risk. So if I'm saying the highest bot call, so over here, that's gonna be this, because this one's, the highest, there's only one bot call. So instead of doing plus and minus there, if I increase this, the thing gets wider. If I decrease it, it gets shorter, but as the price goes up, the loss is reduced. So I want to make it a bit wider, so I'm gonna increase it. See that? And then it's 5 days out. The probability above 50%. Nice risk to reward setup. This is the margin that's needed. This is the funds needed. So I'm gonna, and so I can do multiplier 5, 10, and so I'm seeing that the max profit is this, and it does say the max loss is this, but that's not.
So yeah, you gotta put a little bit of work in, but then again, how are you gonna get value from not doing something that requires some sacrifice of your time and effort, some struggle? If you're not using Sensible or you're not using the tools that I just showed you, you can manually place market orders on the strikes and the prices that you've been given the information for, which is on the option chain as well. And then you could square them off once they become profitable as market orders. So stay tuned for more Z hacks and other parts of the series.